Hello Sector Watchers, this is the 44th episode of Sector Spotlight on Tuesday the 18th of August, recorded on the 17th. Welcome to the show, my name is Julius de Kempenaer and I'm your host today. Today we'll do our regular overview of asset classes and US sectors and try to put last week's rotations into the longer term perspective. After the break we'll have an in-depth look at individual stocks inside the industrial sector. And this means we have a full show. So let's start right away. As usual, we will start our overview with the RRG for asset classes. So on the left hand side I have the daily RRG, and on the right hand side I've loaded up the weekly so we can pair the two and put the shorter term rotation in the longer term perspective, because I think that is becoming more and more important and crucial to get a handle on this market. If we just quickly look at the table, then we see that commodities, the GSCI commodity basket had the best return, 1.1%. It was a quiet week, 1.1 minus 2.4 for investment grade corporate bonds. We've seen spreads much bigger over the last few months, I should say. Funny thing is that the benchmark, the Vanguard Balanced Index Fund, actually came out at flat, 0.0, almost nothing. Stock market leading over government bonds, 0.8 versus minus 1.0%, not massive. DJP, the other commodity basket that we're tracking, up 0.4, a little bit less. Interesting to see is the opposite rotations for DJP and GSG. I think we need a longer term picture to figure out what's going on there. They've been picking up quite a bit of pace over the last few weeks. And in the fixed income department, high yield remains weaker, and does high yield, and you see the tails pushing further into the lagging quadrant together with the government bond ETF, GOVT. Now, stocks, ITOT pushing further into leading versus GOVT pushing further into lagging is clearly sending a message to prefer stocks over bonds, at least for the short term. I also discussed that with Dave Keller. That's already 2 weeks ago, on the 6th of August, with in the final bar, and it was a pretty clear message from the shorter term rotations, and that pretty much that image is continuing in favor of stocks. If we put that into a longer term perspective here on the right hand side, where we have the weekly RRG, then we see it confirmed, but not super enthusiastically. Stocks are inside the leading quadrant, but they continue to lose a little bit of relative momentum week after week. So this is a 5-week tail, and you see that every observation comes in slightly lower on the momentum scale than the previous observation. But it is still picking up on the RS ratio scale, so it's still picking up relative strength, or the trend in relative strength is continuing, I should say. So the longer term picture is confirming the preference for stocks over bonds, but what worries me, sort of keeps me on my toes and on the edge, is the fact that the ITOT ETF, the stock market, is continuing to the right, but it's losing momentum. So that relative trend that we've seen for so long, stocks outperforming bonds, is still there, but it's losing momentum. And that is something that you got to keep in the back of your head when you look at this market. I mean, yes, the stock market is going up. Yes, the S&P is showing an uptrend. Yes, there's a lot of major stocks that are in uptrends. But this rotation, these tails, are sending some sort of warning signals to to approach this move with caution. Let me put it like that. It's not like if both go into the leading quadrant at a 45-degree angle, then everything is cool. What we see here is that it's cool on the daily chart, but it's sort of flattish. Be careful on the weekly. Again, back to commodities, we see the DJP and GSG tails moving to the right. GSG is also already rolling over, which sort of confirms the longer-term problems that we've seen in the commodity markets. And we've seen the fixed income complex, the roll inside the lagging quadrant together with the US dollar, that's losing a lot of value recently. Anyway, this is the image that we currently have for the various asset classes. Let's move over to sectors and do the same thing for the sector ETFs. Let me make this a daily update. And as you can see, it's already August the 17th, so I'm recording this after the close on Monday. So I'm going to put this back on Friday's close, so we have a apples and apples and oranges, a like-for-like comparison. Here is the weekly for the S&P 500 update there. Let me put it like that. So here we have the sectors on a daily scale and on a weekly scale, and this one also needs to go to this is the week beginning August 10. Now sort it here as well. The winning sector of last week is industrials, followed by energy and then consumer discretionary materials. They're all above the benchmark SPY, which gained 0.7%. So all in all, pretty good week for some, let's say, pretty offensive sectors. If we go below the benchmark, then we find healthcare still a gain, tech almost flat, 10 basis points, and then the negatives were communication services, real estate, and utilities, so more defensive. So that is in line with a good performance for the stock market, this sector rotation. Now, the tail that catches my attention is that of industrials. So these are 5 trading days. So if we scroll this back, 1, 2, 3, 4, 5. Let me highlight that industrials tail. And you see that it was, when we spoke last, like literally a week ago, it just moved into the weakening quadrant. The trend was up, but it was losing relative momentum. And then over the course of the week, so this was Monday, and then Tuesday, Wednesday, Thursday, Friday, we have this all-out reversal of industrials. That is an interesting rotation, because this sector is coming from a good stint. It moved into the leading quadrant in July, 24th of July, and then just lost it a little bit and then rapidly reversed. So these are the hooks, these are the rotations that we like, because the relative trend had already picked up because it moved into the leading quadrant from improving, then it lost a little bit of momentum, went into the weakening quadrant and turned back up. And that's usually the second or the third or whatever leg of an uptrend that's already established, a relative uptrend that's already established. So they're a little bit more reliable. And let's face it, this tail, this angle is very, very nice on the industrials tail. Last week we looked in depth at technology and communication services. And we see that technology once again rolled over. So it did well and then it rolled over again. Still remains a strong sector. And communication services was almost flat, lost it a little bit. And starting here, it looked pretty good, and then it sort of stalled and died, and it's now, these are, believe it or not, these are 5 observations. You see the difference in length of tails can tell you a lot about the move of the sector. So let's compare communication services here with the XLI tail here that we just discussed. So this is a very nice powerful move further into the leading quadrant. This shows that there is like a lot of power behind that move. And if we then look at communication services, then that's like stalling at the left-hand side, negative side of the plot. It looked to be improving, didn't really come through. Now, if we're going to put this into a longer term perspective, just like we did with the asset classes, then we can see, we can see here that industrials and what's this? That's staples, I think. Well, let me just do it easy on symbol. We got materials and materials. It's picking up the pace here, so this is good because materials is inside leading, losing a little bit of relative strength, but on the daily it's already starting to pick up that relative strength again. So that's a good thing. It looks like materials is starting to pick up, which could keep materials inside the leading quadrant on the weekly. We do the same for communication services, and we saw it here. And you see that communication services is inside weakening, losing a little bit, and the daily tail stalled. I was hoping, expecting, assuming that this rotation that we saw last week would make it into the leading quadrant and come back to pick up that weekly tail and turn it around. So far that has not happened yet, but if we work from the right to the left, that's when you want to rank sectors, it's from the right to the left on the RS ratio scale. It's still the fourth strongest sector, and it's still on the right hand side of the 100 level on the RS ratio scale. So communication services is still a good sector, but it's in a pause right now, I think. Now, energy picking up strongly and nicely on the daily chart, inside improving, but if we look on the weekly chart, it is rolling over and it's rotating back. It had a very nice rotation the last few weeks, but it seems to have lost its mojo, and I wonder whether this tail on the daily will be able to turn that around. I don't think that will happen because it is the weakest sector on the RS ratio scale. Financials, short tail, but moving in the right direction. How does that match with the weekly? Well, here you see that financials rolled over and are heading lower. It's a short tail, but on the wrong side of the plot, on the left-hand side. I am not sure if this short daily tail will be able to cause any improvement for that weekly. Now, industrials, I will talk about industrials later on in the show in the second half, because I do think that it is interesting. We see a similar move for the weekly industrials tail here. But as you can see, it picked up a little bit to the right. Let me zoom that in. And if this tail here on the daily pays off and continues that strong move into the leading quadrant, it's definitely possible to make one of these wavy tails on the weekly and push it into the leading quadrant. So industrials is, I think, definitely a sector that we should keep an eye on in the next couple of weeks. Now, technology, as we discussed, rolled over. On the weekly chart, it is still the strongest sector. And as you can see here, the last 2 weeks, we need to magnify that pretty intense. You can see that the tail moved. You see these little jumpy things, but as I said, it's still the strongest sector in terms of RS ratio. So I'm going to stick with that relative uptrend no matter what. Quickly do staples, and staples in lagging, picking up. This is picking up. It's picking up inside lagging, so you know, might become interesting, but not yet. Real estate, pushing further into lagging. Today was a pretty good day, as you can see, because it's starting to hook back up, but that's only 1 day. And on the weekly, we just hooked back down, so I'm going to stay away from real estate. Same for utilities. That daily is now starting to push further to the left, and I will probably do the same for the weekly. That already started moving back to the left, so I'm going to stay from that as well. Healthcare inside lagging. Looks a little bit like staples, but they're both in lagging. They're both slightly picking up relative momentum, but not nearly enough to become overly enthusiastic. And then we have discretionary with a nice rotation on the daily, so it's coming back up, but we're losing it on the weekly. And again, this is the second strongest sector after technology in the US space, and we'll have to see whether this daily tail will be able to improve that weekly and turn it around. It is a nice rotation, and I do like the strong move here on the last day. So all in all, trends pretty much intact. If we focus on the little bit longer term picture, technology remains the strongest sector, followed by discretionary and materials, and then communication services, despite the fact that they are all sort of losing relative momentum, but they're far enough to the right, which definitely enables the possibility for them to roll back up, and some of them are helped by stronger daily tails like the consumer discretionary that we just saw here. Now we're going for a quick break, and after that I will do a deep dive into the industrials sector, because we haven't spoken a lot about that sector lately. It's showing a very nice tail on the daily, so I want to see what's happening inside that sector. Stay tuned. We're going to go for a 30-second break right now. And welcome back. Thank you for staying with me. We're going to talk about the industrial sector, but before we do that, I wanted to, it's not really a mailbag question, but somebody put a comment under the last video of Sector Spotlight on YouTube, and I think it was interesting. It was the mountain parameters is the name. I get a seat of the pants impression that on days at market open, when it gaps up, the constituents of the sector group at the top of the sector summary are largely the same. Then the next time the market gaps down on open, it's like a teeter-totter, and the group at the bottom yesterday gets propelled to the top, and there is a group that stays near the fulcrum in the middle for both of these situations. If we accept this impression, I have as relatively accurate. Would it be fair to assume that if looking at a weekly RRG, the rotation of the sectors could be used as an inflection of how many times that week the market gapped up or down at the open, and therefore also a pretty good indicator of relative weakness or strength of the overall market for that time period? My answer is here, and as I wrote there, it's a pretty rough guide, but I've seen the same where, you know, I make a video and I look at a tail that's doing good, and then I record all these shows a day prior, and then I talk about something, and then when it airs, that group or that sector obviously moves against me. Like if I say it's going up, then it gaps down, and vice versa. But during the week, it sort of gets okay. It gets back into its trend. And that's exactly what RRG is doing. It is sort of picking up that relative trend, and the weekly will get rid of the daily noise. That is what I think is happening in this comment here. That's what it does, and it picks up that sector rotation. So it's a very, subjective, maybe seat of the pants impression, but I think it makes sort of sense. So wanted to share that with you. Another thing is we're going to talk about industrials, and but I wanted to point you to an article that I wrote for the Chart Watchers newsletter last Saturday about the technology sector. We've seen that the sector is doing really, really well, but not all tech stocks are looking good. Most important ones still do. So despite the fact that the sector can look good on an RRG or in general on the chart, doesn't really mean that all stocks in that sector are looking good. And that's exactly what's happening in the industrial sector that we're going to talk about right now. Here is the RRG for the industrials sector, so all stocks inside the industrial sector in one plot. It's pretty busy, so it's a pretty big sector. And you know that the way I do it is you can select those tails by just clicking, highlighting that in the table, and then with the control, holding down the control key, and then with your arrows you can walk your way through the tails and pick up what you think is interesting and find some themes. Now I have done that. I'm not going to do that during the show and waste all that time with you. So I have done that work and I have highlighted a number of tails that I think are worth looking at. And let's put that, you can rank them on the tail here. Let's walk through what we see here. Obviously there's these two tails, FedEx and UPS, that are shooting way out into the leading quadrant. So these are definitely the strongest stocks in that sector. Does it make them tradable? Well, I think not anymore. If I look to the sector holdings and I select FedEx, boom, and UPS is even worse, well, or better. I really don't like to chase these type of markets because they went too far too fast. If you buy it at these levels, that's an inherent risk. Is it a good chart? Yes. If you own it, should you hold it? Yes. It's a very good stock. Be prepared for some sort of a correction. Maybe take some off the table and get back in at a lower level. But it's definitely a good stock. It's one of the best in the sector. It's one of the leaders. It's dragging it up. I do like the turnaround and relative strength that you see. So, from a tradable perspective, too late to get in right now. So this is really a buy the dip stock, but it's got to be a real big dip. So these have run its course. These have been too fast for me. And if you look at, here are a few stocks, PCAR and KSU, that are rolling back up from weakening into leading, and we've discussed that when we talked about sectors. These are potentially interesting stocks, and if you look here, this is a really nice break. If that comes back, this is buy the dips. If this comes back to levels between, let's say, 80 and 85, I think that's a very good level to get back in. Or was the other one, KSU, City Southern. This is even better. It only just broke out, and it also only just broke out on the relative. So this is a very nice stock to pick up. Maybe if you're a little bit more adventurous, take some money out of FedEx and UPS and put it into KSU to profit from the next leg of that rotation and wait for these two to roll over. Now, you may have heard me say a lot of times that it is just as important to know where you should not invest in a sector, or where you should not invest, because everybody's always looking what to buy, and I think that here in this industrial sector there is a very clear theme of what not to buy. And if I look at this sector here, then what do you think of this? This whole cluster of blue tails inside the improving quadrant rolling over. back to. They're in a negative, in a relative downtrend, and they're rolling over. They're the opposite of KSU and PECAR. And look at this. These are all, well, predominantly airlines. UAL, Delta, GEs or GE, whatever, always curveballs. Southwestern, and then Boeing Aerospace. They're all in that airline space. They're all rolling over. That is a very dangerous thing, I think. So I like the sector, but I don't like the airlines. I don't like these tails inside improving, rolling over. So if we quickly grab a few of these charts before we need to go, we can see what's happening here. So this is United. Can't really come off. You see that the RS momentum is already putting in a new high. Probably gonna have RS ratio make a new high below 100. It's not really able to come back above this old support, now resistance level in the 40-42 area. If we look at Delta, we see a similar tail. Let's look at the chart for Delta here quickly. You see the same also struggle with that support, now resistance area, big overshoot, now back, basically going nowhere. Relative strength not picking up. Because it's not picking up, momentum is starting to roll over. When momentum is starting to roll over, you will see that RS ratio line will very soon start to roll over as well, and then we'll have it back into that lagging quadrant. So again, difficult chart, Delta UAL. And oops, let me go to let's stick with the airlines first. LUV, pick up LUV here. Southwest Airlines. I think these are the guys that are doing all these rap songs when I do the safety briefing, right? They got very fun videos on YouTube, but the chart of the stock is not as much fun. Similar chart to Delta and UAL, not going anywhere, rolling over. So that whole group of airlines I'd be very, very careful with. Let's quickly look at BA, big stock, important. Same thing, tail rolling over, tried, didn't work, and now getting back at risk. And GE, that stock has been, I've seen it pick up pace so many times over the last few years, and it tried, and you see there's all these annotations still left on my chart. Tried, and then boom, there you go. And now it's not even able to get off that floor. If GE breaks below this support level, then oh my God, like this is 560. This is really, really weak, so I'd be very careful with that. There's a few tails inside the weakening quadrant that are potentially interesting. We can't look at the chart, we're running out of time here. But these are some names that you may want to call up on your own StockCharts account and look at these tails on the RRG, see where they're going. There's some very nice stocks inside that industrial sector. So again, to wrap it up, industrial sector looking really, really nice on the daily. I think it's going to help the tail on the weekly to move further to the right. And inside the group, there are some very nice stocks. I like PECAR and Kansas City. I don't like the airlines. And here in this group, there are some very nice chart setups to be found. And that, ladies and gentlemen, concludes Sector Spotlight for today. Thank you for watching, and if you liked the video, please use your magical thumbs. Questions go into the comment section, where you will also find my answers, as well as links to articles or pages when that is applicable. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern, with replays on the StockCharts YouTube channel. For now, please stay safe, and I hope to see you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.